Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey, everybody. Welcome back to the IRS Debt and Audit Podcast with Brian Loughrin. I'm your host, Mike Leon. My buddy Brian here is a veteran tax attorney with over 25 years of experience helping individuals and business owners resolve serious IRS problems. He's admitted before the U.S. Tax Court and represents clients nationwide in audits, debt resolution, and federal tax disputes. So if you're a small business owner, you're a freelancer, you're a 1099 worker, chances are you've had at least one moment where taxes felt overwhelming or even impossible to keep up with. Don't panic, because Brian's going to help us navigate all of this. So Brian, let's start with this high-level 30,000-foot overview. A lot of smart, hardworking business owners, they get into tax trouble. Why is this so common for self-employed people? And explain a little bit of this.
Well, thanks, Mike. Yeah, really the distinction here is I'll say self-employed to start with that. That's usually people that are what's called 1099 or independent contractors. It's essentially where you're paid for a job or services and no taxes are taken out, usually paid directly by the people you provide the service for, some third party, maybe like a Uber driver or something like that. And those people have an issue oftentimes because they're supposed to send in tax deposits at least every quarter. They might get paid once a week, once every 2 weeks, maybe once a month, but they're supposed to make deposits equivalent to what they owe through that particular quarter, 4 times a year. I tell my clients I've never met anybody that can do it quarterly, do it monthly, or do it every time you get paid. And basically, the simplest thing to do is look at your prior tax return, assuming your income is close to what you made before. Just go with that and look at how much you owed in federal tax total, not what you ended up paying on April 15th, but the total amount of tax owed. And then just divide that by however many pay periods you have in a year. Say it's every 2 weeks, that's 26 pay periods. Then just send that amount in on average every 2 weeks. And at the end of the year, you'll wash, or you'll pretty much break even. And that pretty much is how it is for self-employed people. Obviously, for somebody saying a real estate agent that might make a commission once a month or maybe 3 commissions in 2 months, it's a little different, but you can still factor in the percentage of income. So if overall you're paying 26% of your total income goes to federal withholding, then it's a no-brainer. If you get a big commission check, say on a home sale, just send in 26% of that check to the IRS. And again, you should come pretty close to washing. But the thing I tell people is this: get with a good accountant or CPA. Doesn't have to be a CPA, it can be a good accountant. And you can always bump them towards the middle of the year and say, look, here's what I've earned, here's what I've sent in. Where do you see me? Am I on the right pace? And so that's always a good way to go. As far as small business owners, somewhat similar. They pay themselves, and oftentimes they'll run payroll to pay themselves. But the biggest issue with small business owners is that if they're running payroll for their employees, depending upon the size of payroll, if they fall behind on the deposits, that's a hella big thing for the IRS. And that's because about 80% of what the IRS takes in every year isn't from tariffs or truck tire tax or some esoteric type tax that people hear about once every 5 years. It's from payroll tax withholding. And most people, the majority of people in America are employees or W-2 earners. They're not self-employed. They're not business owners. So it's a very big portion of the people out there have payroll tax withheld. Well, what can happen, I've seen this hundreds of times, is that a business owner falls upon hard times for various reasons. And when they're running payroll, they might have enough to pay the employees, but there's not enough to send in the taxes to the IRS. And if they fall behind, the IRS goes into hyper overdrive, and it is a very big area of enforcement for the IRS.
Brian, staying on that, because it sounds like maybe you can tell me, often you see clients who misunderstood the difference between the personal income and the business income, or maybe they didn't set aside enough for taxes. Is that kind of one of the more common problems that you see?
It is, and it's usually somebody that is building a business so fast and things are just blowing up real quick and they're doing great and they're running and gunning and doing everything, and they don't really keep an eye on the bottom line. One of the things that I've done with my clients over the years is size up what their situation is. And I'm talking small business owners. And again, small business for the IRS is where you have gross receipts of 20 million a year or under. So that's a large percentage of businesses out there. What I'll do is when my clients come in with payroll tax problems, I say, look, I'm going to look at overall what you're doing. I'm not just going to focus on the payroll tax. How are you handling your bookkeeping? How are you handling the payroll? How are you handling accounts payable and so forth? And oftentimes I'll make referrals to different types of services that are going to benefit them. Maybe it's an online accounting service or bookkeeping service. Oftentimes it's a referral to a really good CPA that we work very closely with a couple of different CPAs. We make referrals that way, but also kind of size things up and then get things straight. One of the things when I was talking about how the IRS goes real hard for payroll tax enforcement, and it makes sense. I always tell people, if 80% of your income came from one source and that one source called you, you'd probably jump over the desk to take that phone call because that's 80% of your income. Well, with the IRS, if you fall behind on payroll tax, they'll put somebody on the case very quickly. I tell people handling a payroll tax debt of $50,000 in many respects is equivalent to handling a personal tax debt of $500,000. I mean, it's 10 times the difference. But from a work standpoint, it's pretty close because the IRS is really focused on collecting payroll taxes. And so they will move very quickly and with a very heavy hand. And it's been that way for 100 years, and that's never going to change.
Let's go back to 1099 earners for a second. How does the lack of withholding compared to W-2 employees potentially put them at risk, or does it potentially put them at risk?
It does only if they're not making estimated tax deposits. And the thing people will say is, well, yeah, you know what? I bank all that money. I know I'm going to pay 25% of what I take in at the end of the year, or on April 15th, I should say. I'm going to owe that to the IRS. So I just put it in the bank, and then I go get my taxes done. And then when my CPA gives me the return, it says this is much I owe, then I go ahead and I just include it with the return. And I say, yeah, the problem is you're going to get penalized for late deposit, not late payment necessarily, but late deposit. And you're eating, in some cases, depending upon your income, you're eating thousands of dollars in penalties and interest. Whereas instead of putting that money in the bank, you should be sending it in. And again, I don't know anybody that can stay consistent on doing it quarterly. If they are, they don't call me. My clients are people that have problems. So I say every time you get paid, send a chunk of it to the IRS. So no, it's never a benefit. People say, I'm going to put it in the bank and put it in a savings account. I said, what's that savings account paying? 0.1%. I said, okay, well, the IRS interest rate's running about 9%. So you're screwing yourself by sitting on that money. There's no advantage to that.
So, Brian, and obviously you can get into this in your response. A delay would obviously make worse for the person. But what are some steps that they should do? Someone's behind on taxes right now. What's the first step you would recommend before the IRS actually takes further action?
Well, again, they've got to size up where they are on their filings, because one thing about the IRS is that, and I'd mentioned this previously, if you have multiple tax periods, the IRS will not work any type of formal resolution on a piecemeal basis. It's not like having 5 separate credit cards from the same bank. Each one has its own due date and balance, and you can kind of work it that way. That's not how it works with the IRS. It's a package deal. It's a one size fits all. So the first thing I ask people when they call in and say, I have a tax debt issue and so forth, the first thing I say is, where are you on the filing? Are all your returns filed up to this point? And if not, then that's the conversation focuses on that. And then also the next thing I ask them is, where are you year to date on your deposits? Because here we are, the middle of 2025. Somebody came in tomorrow and said, I owe the IRS. It could be $1 million. It doesn't matter. Personal balances. And I call the IRS. The first thing the IRS is going to ask me is, where's your client on deposits for 2025? They're not going to ask about the $1 million that's owed first. That question will be coming, but they're going to want to know where my client is year to date. So for the IRS, they want people to focus on making timely tax deposits for the time that they're in. So again, to your question, it is where are you on the filings, and then we start looking at the balances.
Brian, for these business owners that maybe this is kind of spiraled out of control for them, Are there actual solutions available for these small business owners, like offers and compromise, payment plans, penalty relief? Can you kind of explain all of these things?
Yeah, it just depends upon the situation. It's kind of like calling a doctor and saying, "Doc, I'm sick, or I've got a terrible pain in my stomach or my leg or something. What are my options?" Well, doc says, "Yeah, you got to come in. I got to examine you, run the test, look at it, history, and all that." So, yeah, there may be multiple options. It just kind of depends upon the specifics of the situation. For most small business owners, what happens is when they fall behind on payroll, and they're not making the payroll tax deposits, that can get put on them individually, and that's called a trust fund tax. And to explain that, basically, when a business owner runs payroll, if they do not send in the deposits, which usually amount to roughly about a third of the payroll. So if you're running a payroll of, let's pick a number, $10,000 a week, which is not outrageous. $3,000 a week is supposed to go to the IRS. Well, all of a sudden, a month goes by, 2 months goes by, 3 months goes by. Next thing you know, they're sitting on tens of thousands of dollars in unpaid payroll tax deposits. What will happen is the IRS will come in. They will determine what they call the responsible party, which really is most of the time the business owner or owners, and they will take that unpaid payroll tax and they will put it on that individual personally under their name and social security number. And they will be simultaneously trying to collect from the business and from the business owner. So business owner says, "Well, wait a minute, I incorporated. I mean, I started a auto repair shop or a home AC business or something." And they'll say that this is my business that owes it, not me. Well, the IRS says, "No, that's not how it works, because if the business doesn't pay it, we can come put it on you." And next thing you know, that individual is getting a bill in the mail for an amount pretty much equal to what they're sending a bill to the IRS. And that, for most people, is very, very surprising.
So, Brian, right now, small business owner, they just heard this and they go, "Oh, wait, that's me." What should they do right now besides contacting your firm? What should they do right now? What's your message to them?
Well, what I would tell them is don't just call the IRS. And that's a mistake that a lot of people make. They fall behind or they get notices. And of course, there's a toll-free number on there and all that. And people say, "I'm going to call the IRS and talk to them, and I'm going to tell them what's been going on and why I haven't paid." I said, "Listen, they're not there to help you, okay? They're not your friend. They may be friendly, but they ain't your friend, okay? They're there to collect as much money as fast as they can. And there's nothing wrong with that. That's not evil. That's not terrible. That's not horrific." And I tell the business owners, look, if somebody owed you a bunch of money and they called you and said, "Hey, what can I do to make this right?" What are you going to tell them? Pay me up, pay me as fast as you can. I said, "But don't call the IRS like that. Call me. Let me see exactly where you stand. And let's make sure there aren't mistakes on these returns," because oftentimes when people get a tax debt notice from the IRS, those numbers are not automatically correct. I don't just take the notice and go, "This is what you owe."
Right.
I say, "Hey, I want to look at the returns. I want to look at the account transcripts. I want to look at the master file." There's all kinds of things I want to look at before I just tell my client, "Okay, this is the number we're working with." I need to make sure it's the correct number. It's not that the IRS is purposely trying to overcharge people. Believe me, they don't want to do that, because if they do, there's enough computer geeks out there that, by God, if they ever caught the IRS putting the thumb on the scale and overcharging interest or penalty, it'd be all over the news. I mean, the IRS doesn't want that kind of publicity. I don't think they overcharge people, but at the same time, the returns are what the IRS uses. And if the returns are not done correctly, and I've seen thousands of tax returns that were incorrectly prepared, most oftentimes to the detriment of my client, we want to get the numbers right, not just go with the number that the IRS says.
Well, Brian, thank you so much for the insights on this and the analysis. We truly appreciate it.
Well, thank you very much. I appreciate you having me.
And thank you for joining us for this episode of the IRS Debt and Audit Podcast. If you're a business owner who's fallen behind with the IRS, you're not alone. You got options. Visit tampataxrelief.com, request your free consultation, or call Brian at 813-694-7177. Be sure to subscribe, leave a review, share this episode with someone who may need it or who maybe is going through the same situation. I'm Mike Leon. Thanks for watching, everybody.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.